Good morning and welcome to this weekly markets update from AGM Markets. Today is the 2nd of July 2014. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just to review what happened in the markets last week and give some sort of outlook for this week ahead. I'll not make any trickles recommendations in this video. Do trade at your own risk. If you could please read a full disclaimer on our website at www.agmmarkets.com, that would be most appreciated. And one last thing, for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, then I hope you had a good week trading last week. Let's look ahead to this week. Just in terms of Forex, kind of doing this video on a Wednesday this week, a little later than usual. I've been away for the last sort of week. So what happened yesterday in terms of the data? In terms of high impact stuff, we had Eurozone CPI flash estimate that came in as slightly weaker than expected, at 0.5% versus the forecast 0.6%. Out from Canada, the GDP month on month, that came in a tad weaker than expected, as that was 0.1%. So this is Monday, not yesterday. And to finish off Monday, we had the US pending home sales. That was a much better number at 6.1% versus the 1.4%. So a big beat on the figure there. Overnight on Tuesday, we had Chinese manufacturing PMI that came in as expected. We also had the HSBC flash manufacturing PMI that came in a tad below expected, but nothing major there. And then in terms of Aussie, the cash rate came in as expected. Well, not came in, but it just pretty much did come in as expected. But in terms of, it's not a massive piece of data, it's just a decision. So they kept the rates the same. 9:30 yesterday GMT, with the UK manufacturing PMI with a much better than expected number, so 57.5 versus the 56.7. So it's staying very strong, the UK, and no wonder we're seeing a cable rally so high. And then out of the US at 3 p.m. yesterday, with the US ISM manufacturing PMI, and that came in slightly weaker than expected, as the forecast was 55.6. It came in at 55.3. Today overnight, we've had weaker Aussie trade balance. I mean, the Spanish unemployment change, all that's mid-tier data. In terms of high impact stuff at 9:30, with the UK construction PMI, that's forecasted at 59.7. It'll be very interesting if we get above 60 there, because we really could just absolutely fly up on cable. It's just so bullish at the minute. At 1:15 p.m. with the ADP non-farm employment change, that's expected at 207,000, so higher than previous. Tomorrow we have some overnight Aussie stuff, overnight China as well, so we've got like retail sales, manufacturing PMI, etc. At 9:30 we have more UK data. It's got the services PMI this time. At 12:45 you have the Eurozone, so the minimum bid rate, that's expected to stay the same at 0.15%. And at 1:30 we have a raft of data. We've got Canadian trade balance at the ECB press conference. Interestingly, we have the US non-farm employment change. That's on Thursday instead of the normal Friday, because it's a US bank holiday, so do keep that in mind. And also at the same time, the US trade balance, weekly jobless claims, and the unemployment rate as well. So lots of stuff to keep an eye out for on Thursday at 1:30 p.m. And to round off the week in terms of high impact data, so the red data we're looking at here, we have the US ISM non-manufacturing PMI, that's forecast at 56.2. So quite a bit out this week. It should be interesting. Or, I mean, we already are on Wednesday this week. So some interesting moves out there, interesting setups, and it should be quite an interesting rest of the week. Okay, then let's look at the euro dollar. So this is the weekly. I mean, bear in mind I wasn't trading the last sort of few days last week, so a little bit rusty, but I'm still sort of catch up on what's going on. But nothing major has changed in terms of some of the charts. But there's definitely some interesting things going on. So in terms of this euro dollar, this is the weekly chart. What have we been speaking about in terms of this weekly? What we have, I'm just going to add the 38.2. We don't normally look at it on this video because personally just like to keep it nice and simple with a sort of retracement range with 50% and 61.8, but the 38.2 is a perfectly valid fib level, and you can see here we've had this lovely reaction, haven't we, at the 38.2. So we've had 3 weekly candles test that level, and we had that close a couple of weeks back, and last week's candle, interestingly, nice and bullish, and we closed above the 50-week moving average there. So a lot of people think that this is a bullish move, and well, the bulls who want to be holding this fib from the low of 2013 to the high of 2014 will want to see a rotation towards the upside at those 0.0% line, which is at 1.3993, so just below the 140 handle. The bears, however, will want to see the other side of the coin capped, and that is this move, in my opinion, here. So that's the high of 2014 to the low. It looks like we're going to get there, to be honest. We're not that far away now. We're pretty much just below. We're about 80 pips away. So that 50% there comes at 1.3748. So a couple of pips below, a nice 50 pip increment round number, being 137.50. So that's a key line in the sand for this week if we do get there, for sure. What else? In terms of other levels, I mean, the lows here do coincide with the round number as well, that being the 135. So, I mean, you've got a sort of 250 pip range where I assumed we'll be chopping around this week. And of course, there are some interesting levels in between that. So let's look at the smaller term time frame. So that's the weekly done. The daily is the exact same move, of course. So in terms of the fibs on the daily chart, that's what it's all about. In terms of that bearish fib, that's one to keep an eye out for, I think. And then the other one, if you're a bull looking to grind this one higher, this is the fib move here. So that's from the lows of June to the high of June. And that 50% and 61.8 has some previous support as well, and I'll show you that previous support when I flip it to the 4-hour chart. And interestingly, I mean, they're all lining up with round numbers, which I think is even more technical. So this 50% here coincides with the 136 handle, pretty much to the pip there. So keep an eye on that. Let's flip it to the 4-hour chart. And what happened last week was quite interesting. I'll just zoom back in actually. So this is the same move. What was going on last week in terms of fibs? So I'm leaving that low there. You can see I've just drawn this high down to what was going on last week. We had this lovely move here. So nice bounce off of that. Actually, it may have been the week before. I can't remember now. But anyway, there's another thing I'll show you. So we had first of all, we had this move here right after 50%, and that rotated higher. And then if you extend your high a bit to that new high there, so that would have been the high of the chart and the low of the chart. And bam, surprise, surprise again, we came back down to the 50% at the 1.3577s, and we rotated high here and took it out. So the next one, I mean, yeah, if you want to look at the whole chart, that's perfectly valid. That's what I was just speaking about in the daily there. You can see lovely previous support at the 61.8 and the 50. But I'd not be surprised to see a lot of people look at this smaller one here, because that's technically where that's technically the bounce off of the previous dip. So if you flip it to the 1-hour chart, it's nice and simple here. You're looking at the low of the 1-hour chart to the high if you're sort of zoomed in on this sort of view. So that 50% comes at 1.3630s. I mean, I'm personally going to keep on all of these. I think we should get some interesting action if we do get there. Of course, I mean, you could keep on grinding higher towards that 50% that we're speaking about on the sort of daily, which comes at 1.3750. But there's it's technically just sort of flagging towards the upside, grinding nice and higher. So you can already see that we're starting to retrace at the minute. So the first level, in my opinion, to keep an eye out for is this 50%. And it also coincides with these previous highs around here as well. So interesting level if we do get there. And that's pretty much the view on euro dollar. Let's have a look at cable. It's a really interesting chart, man. It's just an absolute grind higher mode. There's no major sort of resistances. The only major resistance in terms of fibs, you have to flip it to the monthly chart, I think. Because we're above. The reason being is because we're above these highs here. We're above the highs of 2009 and all the last sort of 4-5 years. So in terms of fib levels, it's all about this move here, and that is from the high of 2006 I think, let's double check that. High of 2007, sorry, to the low of 2009. So that's the January low, I think, or maybe the end of December. Anyway, the 50% here comes at one spot, 73.31. So we're about 180, 190 pips away from that. But in terms of key resistance, that's definitely one to keep an eye out for, I think. And it also coincides these highs here around the late 90s. So big level. I mean, we are sort of currently testing them at the minute, but if you draw a line here on that 50%, so it'll be easy to see it from here. If you draw a line here, that 50%, look at that high there. I'm hovering my cursor over. That's pretty much to the pip. So if we do get up there, it looks like, I mean, in terms of last week's weekly candle, we had a really bullish close above that 100-month moving average. Sorry, it looks like it's just a no-brainer. I think it's going to grind higher towards that 50%, and we should get a test. And if we do get a test, I think we'll get a lot of long-term bulls banking some profits at that level. So we should get a lovely reversal, I think, if we get there. Right, let's go back to the weekly. So to be honest, in terms of the weekly, there's nothing. The only other thing to talk about, because we've been speaking about these smaller fibs, but they are sort of clearer on the daily charts. So we had this first little move here. So that was a dip, bam, off the 61.8 uptrend, retrace, reversal towards the upside. And then you extend your high and extend the low. So you're taking that small dip there, and bam, right after 50%, that fib is played out. So the next one, let's say we've just capped here, for example, we can keep on grinding higher, but that's the low. So that's where we bounce off, and you can see it clear on the daily here. So I'll just zoom back in. So the first move, remember, what we've been speaking about was this fib here. So you can see that clearly there. Uptrend, retraced down to 61.8, rotated higher, took out those highs. And then the next move, you extend that high, you extend the low, right off the 50%. So uptrend, retrace down off the sort of 50%. It did close below, but then it got supported by the 100-day moving average. Remember, we've rotated higher. So the next move here is that one there. And then interestingly, it has some previous support at the 50% there. That comes at one spot, 69.29. So it'll also be one level definitely to stick in there is the 169, because that coincides in between the sort of 50% and 61.8% retracement range. So that's the view on the monthly, weekly, daily. In terms of the 4 hour, it's a tricky one. Nothing really sort of clears coming out. I mean, if you're a sort of aggressive buyer, then this sort of fib move here, that sort of low there, could be one of interest. We could get some interesting action. That also sort of coincides with the 1 hour chart as well, but it's nothing amazing. But it's all about keeping an eye on the price action, to be honest, because if we come back down here, we can get some interesting action. And of course, actually, it does sort of coincide with a nice round number. I think it's 170.50s. It comes in between that sort of 50% and 61.8% range, and also these previous highs here could act as new resistance. So it's definitely one to keep an eye out for. That's the only one that sort of pops out in terms of the shorter term time frames. So sort of the 1 hour and 4 hour chart. If you're looking at them, keep an eye out on that fib as well. But I think it's all about buying the dips in terms of the sort of fibs, etc. And yeah, that's pretty much it. I mean, if you're an aggressive buyer, keep an eye out on the sort of the 171 as well. Just the round numbers of course, intraday trading. We do these videos on a weekly basis, so I'm sure there's a lot of intraday traders out there. We had some previous support there yesterday, and that rotated nicely. So keep an eye on that for a small support level as well. Dollar Swiss on the weekly chart. What have we been speaking about? It's all about, for me, into this fib move here. I mean, we've basically come off this 50-week moving average. Didn't quite test it, but it's pretty much selling off that. I mean, in terms of the level, it's the 0.90 handle. Let's try that nice and clean there. Bam, 0.90. Weekly closes below that, and we've started to retrace a little bit. But in terms of this fib here, you can see I've just drawn the fib from the low of the year to the high. I mean, you can draw it from there. At that point, you can draw it from that. It's pretty much the same 0% line. It's like a pip or two out. But it's just to keep it nice and simple. So it's the fib of the low of the year to the high. You can already see we're making a test off this 50% level. I'll have to zoom in again, actually. This 50% comes in at 0.8867s. And you can also notice here how we've counted this 50% is interesting because it's a previous support. Well, it's basically the big support of 2013. Remember, we were speaking about these multiple spikes, pierces below, closes above, and we've got a nice retracement towards the upside. So there's a nice bit of confluence there on that 50%. And that's pretty much it in terms of the weekly. In terms of the daily, you can see it nice and clear there as well. Lovely candlestick action. Couple of pierces below with the 100-day moving average, as well as nice confluence. And we had a lovely daily reversal candle and close above this 50%. You can already see that it's starting to pop up a little bit in today's session as well. In terms of the fibs to the other side, if you think that dollar is going to go down to lower levels, then that's the fibs to keep an eye out for, in my opinion, on the daily. And that 50% comes at 0.8946, which of course coincides with a nice round number being the 0.8950s. In terms of the 4-hour chart, I mean, if you look at more aggressive sell opportunities, and that's the sort of recent swing high, I think, on the 4-hour, but I'm not a massive fan of that one. But it's all about keeping an eye on the price action. If you get a lovely reversal candle there, then there's no major reason why not to sell. It all depends on how it looks, really. But you can see on that 4-hour chart how nice those 4-hour candles are. I should draw that fib back up there, so you can see lovely candle action there. I mean, we did get a couple of fake outs below, but it was all about this sort of support as well. It's not just about the fibs. If you just draw, I used the brown lines for nice support lines. You can see there, lovely basing there, multiple candle spikes below, and nice 4-hour hammer candles above. You can see we're just in grind higher mode here. So I think the first sort of port of call on this 4-hour chart is this 50 bar moving average there. But no, it's looking very technical. I definitely think we'll get a pop up here this week. In fact, if you're looking at a daily, I think we'll come up towards the 50-day moving average here, and then potentially we could get a sell off. So you can see. No, in fact, I mean, the 50-day moving average is actually just about to cross up above the 200-day moving average. So a lot of people see that as a bullish sign. So this could be a textbook sort of fib here, a nice uptrend retracement down, a pop up, and then a 50-day moving average cross towards the upside. That could be very bullish indeed. Aussie on the weekly, what have we been speaking about for ages and ages and ages? It's all been about this 200 pip range between 0.92 and the 0.94 level. So you can see there, we've been chopping in between that, but you can see last week's weekly candle, we did get a nice close above that, and you can see already this week we've came back down, we've tested this 94 and we've popped higher. So in terms of this weekly, I think it's all about a grind higher towards this 100-week moving average. We said the bias was towards the upside. It's just been holding very nicely. There's a nice fib in between that as well. Remember this one here we spoke about last week, that move there. You can see it's an uptrend retraced down to 50% and rotated higher. So and of course, if you look at the monthly as well, that's a big bullish setup as well. So the odds definitely did favour the upside, and we have finally broken above this now. So we could get a quick aggressive move towards that 100-week moving average there. But I do definitely think we'll get there in the next sort of few weeks. In terms of fibs, I think it's all about the high of 2013 towards the low of 2014. That 50% coincides with 0.9623. And in terms of the daily chart, so I should get rid of that fib now. In terms of the daily, I mean, it's all about the round numbers. So you've obviously got that 94 level, the 0.95 as well. You can see we had a test there on Monday. In fact, you can see that clear on the 4-hour as well. Yeah, it's a lovely test there of the 95 handle. So yeah, that's definitely the key resistance to look out for. But yeah, I think it's all about playing the levels really. But I mean, I personally think it's in grind higher mode, so I think it favours dip buying, to be honest. In terms of daily, there's no sort of clear fibs. I mean, potentially this one here, technically, so that low there to that high, and if you flip it to the 4 hour, I mean, it's not that clear. But the reason I looked at that one is because it's got a nice bit of previous support here at the 50%, and it's technically, we're taking the low of where we bounced off that previous fib that I drew off. So that's technically, if you draw this sort of trend line here, that's the sort of new trend line. So I'm just taking the low off of that dip. You can see it nice and clear on the 4 hour, previous support there. I mean, yeah, a lot of people will be using, I'd have thought, just be looking at this move here. So if you flip it on the 1 hour chart, that one there, so that low towards that high, and looking for, well, it's already sort of trying to bounce up already, but in terms of 1 hour, there's nothing wrong with that one at all. And also, actually, I think the previous move was a fib as well. Yes, it was. That was 61.8. That was last week. So we had a nice uptrend, retraced down to 61.8 and rotated higher. So yeah, there's a few interesting fibs to keep an eye out there. It's all about looking at the price action, I think, see which ones react the best. But yeah, there's more setups towards the upside than there are towards the downside. You've only just got that 95 handles and any sort of reversal, and then you've got that big weekly fib that we spoke about as well. Okay, let's have a look at gold. Gold is starting to break out now. Of course, you had the sort of trend lines here, that trend line there, and we're above that now. So I definitely think the bias is towards the upside. Similar to Aussie, we could get a rotation higher over the next few weeks towards this 100-week moving average. In terms of last week's weekly candle, nothing major of interest. There's a little bit of indecision there, but it is still green, and the previous 3 weeks candles are green as well. So we've broken above that trend line. So I definitely think the bias in terms of the weekly is towards the upside. If we flip it towards the daily, this fib here is an interesting one. We haven't quite tested the 61.8 here, but yesterday's daily candle is a bit of a reversal. But in terms of resistance levels, I think the 61.8 is definitely one to keep an eye out for, and that comes in at what, 1334. In terms of the round numbers, you've got the 1300 marker, and then I think 1320 is a key support as well. No, 1313, that was a key sort of line in the sand last week, nice support area you can see there, which were, well, a couple of days ago on Friday I think we got a lovely bullish candle. So there's nothing major sort of sticking out really in terms of, so you've got that fib there towards, that's the bearish fib, and then in terms of this daily, if you're looking at a fib towards the upside, that's the move there. So we've had a pure uptrend here, to be fair. Well, there was a bit of choppiness around there, but if we do get a retrace, then that's definitely the low that I'll be looking out for, and I think a lot of other people will be looking out for it as well. That 50% currently comes in at 1286s, but of course it could keep on extending higher, and then all you do is just move your high up as well. In terms of the shorter term charts, nothing major really sticking out. Actually, no, what we had last week, I remember this move here, or it may have been, no, sorry, that was the previous week. Lovely uptrend, retraced down, nice bounce off the 50%. So what we did say last week was it's all about just extending the low, but we didn't get that retrace. Well, we did get a bit of a retrace, but it didn't come down towards the 50%. I think that may have been off of a 23.6 there, but yeah, I mean, in terms, I'm not good. I mean, you probably get a lot of people looking at these sort of small dips here, but I'm not a massive fan of those ones. But you can see currently just on this 4 hour chart, it's just going sideways. Nothing, no major movements there, especially compared to the other charts. I think it's a more interesting price action out there, but NFP can definitely shake things up. There's quite a bit of data out this week, so we could get some big moves. So I'll definitely keep an eye out on those fib moves. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube video, or send us a tweet to our Twitter feed, which is at AGM Markets. I hope you have a great rest of the week trading, and I'll catch you next Tuesday. Thanks for watching.